The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're talking insurance and appliances, of all things, that are on the value radar this time around. Value strategist Tracey Ryniec uncovered them. She's here to tell us more about them.
Yep.
So we're going to start with insurance first,
Yes.
right? And under that category would be Aetna.
Yes, and I know, everyone always hears insurance. Oh, insurance company, boring. But not right now. This is a health insurer,
Right.
The managed care area, and they do health, vision, dental. That area's been hot because of Obamacare, so they've been adding a lot of new customers, and it's just a real growth area.
You mean because of the mandate that people now need
Yes,
insurance?
that they need it, so they've been going into the exchanges and in various new states, and they've been adding more customers. So this area has been, very hot over the last 2 years. It continues to be, but you still can find some value here. They're trading around 14 times, so they're not super cheap, but they are in my value range. They are also a Zacks style score of an A for value, which is what we want to look for when we're value investors. But like I said, the value or the managed care area has just been really hot. You can see the estimates starting to trend higher here. You're only going to get about 7% earnings growth this year, and next year is supposed to be a little bit better, around 11%, but you're not really expecting with these health insurers to see, massive earnings growth.
Right.
But it's enough to keep the stock and the momentum going, and because it's still a value, you're still getting in at a good price here. You can really see this chart I just put up, 2-year chart. I mean, the shares are near 52-week or 2-year highs here. But again, does have some value there. So I do like the managed care area, and a lot of them are expanding into the drug areas, and there is some areas for growth there, but just so many people getting health insurance.
All right. I guess now there's an actual line on your tax return.
Right.
That's where you have to fill in.
You have to say whether or not you have it, or you face penalties. So yeah, like it's a big deal now.
Okay. So under the appliance umbrella, there's Whirlpool. They're one of the largest appliance companies in the world.
Yeah. Whirlpool, I've been watching them for a couple years now as a play on the housing recovery, because when you buy a new house or even an old one, a lot of times you'll buy new appliances. It's just what you do. And that we have seen play out. I mean, it's had a good growth trajectory here, but it's still a value stock. I know I've covered it as a value stock in the past. They get a large portion of the revenue from overseas now, though. So both Brazil, Latin America has been a big market for them, and also Europe now is their number 2 market. North America still remains their best market. They've given guidance for what they see going on for North America and Europe for 2015. North America sales increase of 4 to 6%. That's still really solid, given, you'd think maybe the consumer might be exhausted now, but they're not. And then Europe's always been kind of a drag the last couple of years, as we know, because the European economy, it just hasn't been as strong. But they see flat to possibly up 2%. So that's an improvement from where they have been. They've been, definitely down the last couple of years. So if they can get Europe to even just start improving, that's a real good sign for Whirlpool, because it is their second largest market. Now, there is an issue with them with the currency translation, because they have so much overseas business. Their CEO has said in interviews that they might take about $1 billion hit. They had sales of about $20 billion last year. That is significant. You can see the estimates starting to trend down a little bit here, even though it's a Zacks rank 2. But it's not huge, because they do think they can raise prices to counter it, and they do think they can cut some costs to counter it. So we won't know until they report, and then we hear. But with any multinational, currency is going to be an issue. But the underlying business still looks pretty good here. Interestingly, with the chart I put up, you can see the earnings misses and beats here. They did beat last quarter, but they have a string of misses, and yet the shares continue to go higher. So investors are still real optimistic. They're expected to have double-digit growth this year and next year still. So people are still buying those appliances. U.S. housing market is still in the recovery. If Europe's housing market starts to, pick up steam and recover in places like Spain, then, there could be a real good story here for Whirlpool. But as it looks right now, trading just under 15 times, Still a value play, also a A on the style score for value.
Oh, okay.
So both of these are A's for values, and if you're still out there looking for value, it is harder to find, but you can still find it.
Well, if anyone can find it, you can.
That's right.
Do you own either of these two?
I do not, but Aetna is in the value investor portfolio.
Okay. Check out other stock picks and stock picking strategies on our website, Zacks.com. If you're not there already watching this video, you know the drill. Get on over. Link to them all right off the homepage. With Tracey, I'm Terry Ruffalo.